Want to bring you across the bond market now. Stephen Nash joining me from FIIG Securities. A warm welcome, Stephen. This week we've seen a discernible contraction in those spreads. That must be encouraging.
Yes, we've seen quite a few issues come tighter and tighter spreads. Recently there was an issue by Wholesome Finance which came at around 400 over. Then we had Dexus coming at around 325 over, and recently we had Wesfarmers coming at 250 over. So the spreads have really, for lower rated securities, really come in quite substantially.
And there was significant appetite for the Wesfarmers issue.
Yeah, all these issues have been fairly well oversubscribed. The demand is very strong going forward, yeah.
Who's going to be the next one to sort of plough in, do you see? I mean, if Wesfarmers could get it off, I mean, that is, they're undergoing some significant reorganisation inside that company. What are investors really looking at? Are they looking longer term, presumably?
Well, I think the institutional market, primary market, is really now open for business. I mean, it has been closed for quite a while, so we can expect quite a few issuers to come to the market, a variety of issuers into the Australian issue markets.
And something that is not really on the table now, but it is a looming issue, which is inflation.
Yeah.
CommBank, tell me about this linked now, inflation-linked security proposition that they are toying with.
Well, the Commonwealth Government has announced a maturity of a new inflation-linked security. Now, that will be issued in late September, early October. It's quite a big development for the market because the market's been closed, this inflation-linked market's been closed for the last, say, 5 years. And globally, this has been a very important market overall. So Australians have really missed out on the ability to buy these securities. But with the reopening of this market, it will be a major event for the fixed income market, and will allow investors to purchase securities that traditionally they haven't been able to purchase. And if inflation was to rise, they benefit in the sense that their return rises with the inflation rate.
Why would you go into that issuance over, if you were around the tape and consider on the table there was an option for you to go into Wesfarmers or the Commonwealth linked, the inflation linked? What would be the advantages?
Well, if you're concerned about inflation coming up with all the stimulation that's in the economy right now, then an inflation-linked security offers you you lock in your real yield. So if inflation rises, your return rises with that security, whereas with the Wesfarmers it's fixed.
Yeah.
So you get a benefit of being effectively hedged against inflation with these securities.
Why did we shut down that market for as long as we did?
Well, the government didn't have a financing task, and it had difficulty just maintaining the available bonds in the nominal market around the 3- and 10-year futures. But now its funding task is much larger. It needs to diversify its funding, and inflation-linked allows it to do that. When
you look back on the last recession, was that a tactic employed, not putting aside sort of the 5-year gap that there's been, when there was a need to raise money in the last downturn?
Yeah, well,
how was it received?
Australia was initially one of the first issuers of inflation-linked securities, so we've got a long record of issuing these securities. The UK government has obviously been a very large issuer for a long time as well. So yeah, it's a standard tactic for a government to diversify its funding from nominal into inflation-linked.
Yeah. Does that also send a message about, though, perhaps how difficult it's becoming for the government to attract that type of investment, that it has to diversify the traditional issuance in order to attract new investors? I mean, what does it really tell you?
It's not really just on the supply side, it's also on the buy side, because there is underlying a very large demand for these securities. The government hasn't been able to offer them because it hadn't had the funding task, but now things have changed. It's really satisfying underlying demand. So, yeah.
And yet people are saying, Stephen, as you know, that if things are not going to be as bad as we believe they might be, that the government's debt burden may therefore not be swollen to quite the degree it is. Tell me about where you sit in this debate when it comes to, should we ease off the stimulus accelerator?
Well, there's been a lot of debate recently about whether we should withdraw stimulus. I think it's at the moment, I think it's still unclear whether we should be withdrawing stimulus. I think that we need more evidence of sustainable recovery. What we don't want to see is an issue that has occurred in the past, say for example in 1936 in the US, when stimulus was withdrawn and the economy faltered, and then we had to reintroduce stimulus measures. So, you know, calls for immediate reduction, I think, of stimulus are a bit overplayed at the moment. I think we should stay the course.
And look for what signs purely domestically of continued stabilisation, or inevitably have to look offshore as well?
Yeah, I think both of those are very important, and as the government said, they have foreshadowed a staged withdrawal of stimulus in the 09-10 budget, and that will be continuing. So I imagine around the end of this year there'll be attempts to try to wind back stimulation gradually.
I mean, you can understand the motivation behind Gordon Brown and all of this, because UK's firmly mired in recession. Yeah. But to tar everyone under the same brush and to have us in the back row of the photo call at G20 and then expect compliance is all a bit rich, isn't it?
Well, I mean, you know, Australia is a rather small country, you know, but we have a very different economy to the UK. We're in a very good situation in terms of the Asian influence that we have. And there might be a case for us to withdraw stimulus more early than the Europeans, but the case is still being built, so you know, we have to wait and see for that.
And withdraw, just to clarify, both fiscal and monetary in tandem, because that will also imply lifting the bank guarantees as well.
I imagine that there'll be a case to do both, probably around a similar time, but I don't imagine it will be a shock. It'll be a gradual and staged withdrawal, because you know, we've had a very difficult period, and radical reduction of stimulation won't be something that I think the authorities would like at this stage.
Dr. Stephen Nash from FIIG Securities, we will leave it there. Thank you so much.
Thank you.
See you next time.
Okay, thank you. All right.